All right, it is time to get into some top pick ideas on today's market call. And Chris Stuchberry back with us now. We're going to start with a very hot name in technology. The company is called Palantir. So it's not a hidden name in the market. It's had a lot of spotlight, but you still like it now. How come?
It's one of the most expensive stocks on the market right now, right? And so you really have to leave your comfort zone to look at something that's this expensive. But you have to look at it, and just say, why is it this expensive? Really do the work and get to the bottom of it. This company, their business is, the genesis is in the Department of Defense and building software used for combat and war and so on. And then taking this data mining and like data analysis software, which, it's deeply AI based, right? So it's probably an AI winner, and integrating it into the private sector. And, you look at the valuation, it's complete madness. But the internet was a Department of Defense technology. And, 7 out of the 10 largest companies are internet, if not more than 7 out of 10. And you really have to sit and say, the valuation is bananas. Can you buy it on a bullback? Sure, hope so. But are they going to grow on a secular basis? And with like AI data analysis, AI data engineering, you can't in a way think of a better place you want to have your money, and you want to lock into some upside in the AI theme. So I kind of sit here and say, this could be, their core platform could be like having Windows in the early 80s. We don't know. It's that exciting.
Now, getting to your second topic, that is Uber. And Uber is a fascinating one. I look on Bloomberg all the time at what some of the expectations are on Wall Street. I would say this company has some of the most favorable profit growth estimates of any company in big tech over the next few years.
Yeah, this is a really exciting one. The risk is maybe the economy slows down and you're not going to get the top line growth, because you want to have people out, you want to have people doing things. But they've done a fantastic job of allocating capital and of gaining capital. In early 2020, they raised several $1 billion on a 0% bond. So like they take 0%, push that into the market. That's going to mature this year. The free cash flow is excellent. The potential for free cash flow is excellent. During COVID and during those periods, the rides business suffered, but they managed to get their eats and deliveries business profitable probably a couple years ahead of schedule. And so they've got 2 out of 3 businesses. They've got rides doing a really good job of basically printing profit. Eats/deliveries is doing a really good job. And they've got a smaller business in freight. They're not firing on every cylinder. If that turns online, combined with the amount of cash flow they're making, this could be sort of a new crop generation after, your Googles, your Amazons.
Just real quickly, because I want to make sure we get to your third top pick, but one of the dents for Uber, I would say late last year, was, because you said you like Tesla too, and people said, oh, if Tesla gets that robo-taxi thing right, maybe in 5 or 6 years, Uber's going to have some tougher times. Even with that, still worth the risk?
So that's the number one risk, and that hits the valuation occasionally. You struggle with the self-driving car. One of the things that you get a bit of defense on some of these names, and if you notice through Amazon platform, Facebook platform, Uber platform, when you become a verb, there's a pretty good chance on the other side of a self-driving car, you're going to open your phone to the same app you always did, and you're going to click the button that you did, and the self-driving car might be there, and Uber might still get it. Remember, they've got 150 million people using this.
Real quickly, Carrier Global is your third top pick. Got to ask you to make it a quick one.
This is going to be super quick. This is not a massive top-line growth. They've got great management. They've bought in different divisions. They bought a company called Weissman, which does heat pumps. They grew the dividend 18%. They grow the dividend every year. They have an active buyback. As they've bought this larger Weissman business, which does heat pumps, which is a bit of a green trade, they've sold other businesses, so it's a transitionary company. And on the other side, you expect them to continue to grow and have maybe higher margin growth going forward.
Okay. Amazing. This has been a great episode, Chris. Good to see you. Thanks for all the knowledge.
Thanks for having me.
Yeah, this has been a lot of fun. And thank you, everybody, for making this a great Friday market.